Hello everyone! Today we're going to be talking about the tax advantages of real estate investing, and I'll be diving into a specific case study of an apartment complex that I just bought with a lot of our partners and the tax advantages that we're breaking down on what we'll be saving on that property. Let's dive on in. So guys, real estate is so awesome. One of the 4, maybe 20 billion awesome things about real estate is the tax advantages. Legally, morally, and ethically, according to the tax code, you can write off a lot of the repairs that you're making on these properties and write them off against your income and your taxes. You can also depreciate the property over a certain amount of years, usually 27 and a half years, even though the property's appreciating over time. So I think this is awesome, and I'm going to dive into a real specific example case study of a multifamily property we just bought, and with some basic numbers of what we kind of project on the tax savings. Before I dive into this video, I'm not an accountant or a CPA or a tax advisor, but this is what I've had written off on my taxes in years previous, and I've talked to several accountants about. So just my opinion though here. So the tax advantages of real estate investing, according to this tax code and tax law, especially the one that came out in 2017 with the new Trump administration, is you can bonus depreciate any asset that has an expected life expectancy of 15 years or less. Dive into that tax code and read the fine lines. So it's really awesome. It's made it so you can depreciate a lot more stuff day one than what you could before. So this is extremely advantageous if you're buying a house or an apartment that needs a lot of renovations and you're going to hold on to it. So let me kind of explain. I've rounded these numbers pretty closely, but this is a pretty good ratio of what it kind of looks like. So we bought let's call it a 120 plus apartment unit. So we needed capital needed. The capital we needed was $2 million. To buy this property, a lot of units, all of that. Then we had a renovation budget of $2.7 million. So a big renovation budget. A lot of this reno was stuff like the roof is estimated at 30 years. So of this budget, there's roofing, exterior maintenance, parking lot, paint, railings inside the house, appliances inside the house, flooring, sheetrock, carpet in some areas, lights and fixtures and all that. So anyways, based off all this list of renovations, then in your account, what your accountant does is they go, okay, of this X percent, of this that you put in for the roof, well, the roof depreciates over 30 years or whatever they ping it onto. The flooring, I don't know the exact numbers, but let's just say this depreciates over 7, this one over 15, this one's a 20-year lifespan. They kind of just use other IRS guidelines and just estimate what the lifespan is of these different light items. So they kind of categorize it into things that you're putting in, like light fixtures, flooring, things like that, and they put it over these kind of years. So anything that's 15 or less, whatever percent of that renovation budget we're spending on that gets factored into, we can immediately write all that off. So if like 10,000 of this was lighting, like carpet or something, that's a 5-year lifespan, you can write all of it off immediately and not have to depreciate it over that 5-year lifespan, according to this new bonus depreciation. So what we figured on, we've already looked at our reno and are kind of far along and have our accountant going through it and all that, is that, oh dang, where did I put that? Oh yeah, 65%. So we estimate around 65% of this will fall in the bonus depreciation. Okay, now I'm going to go on this a little bit too. Also, this reno though is going to take 2 years. So half of this 65 will be done in year 1, half the 65 will be done in year 2. So let's just break this down for the next 2 years on what theoretically we could write off on our taxes. So 2.7 million divided by 2, so 1.35 million, and then 65% of that we figure will fall into this bonus depreciation under that 15 years or less. So $877,500 will be written off immediately as a loss. Right, as a loss. You just write off that year, you don't have to carry that over. So that's what's awesome about real estate. If you're putting in big, heavy renovations and holding on to it, like this one we are, for example, you write that all off. Now, obviously, if you went and sold this, just let me give you a little tangent here. If you went and sold this, you'd have to recapture all of these things back onto your P&L, and you'd actually pay for that because they technically haven't been losses. You'll make an income. Talk to your accountant on that. You need to work your mind around it. But since we're going to hold on to it for a long time, we can write that off. So let's go on to this. So let's say I put in, let's say, $2 million. Let's put this in like an easier example for someone's brain to kind of work around. Let's say you put in $100,000 of this 2 million, right? If you prorate it out. Okay? So 100,000 divided by 2 million, you're like a 5%, technically prorated, a 5% owner. So 5% of that 877,500, you would be able to write off $43,875 on your taxes. Now, that is against your gross. So if you make $100,000 a year, you would write off that much. Now, you won't net all that because it depends on what tax bracket you're in. So if you were in a 37 or a 30 or a 25% tax bracket, I don't know what type of tax bracket you're in. If you make a lot of money, you're in a higher one. If you make less money, you're in a lower. Anyways, let's just times this out. Times 0.37. So if you were in this, you would net on your taxes $16,233. You would pay in less taxes. So technically speaking, of the $100,000 you put in, you get a true net tax return of $16,000, which I believe divided by 100,000 is a 16.23. I mean, it's an exact ratio. 16.23 tax return on investment, year one, and as I mentioned, year two as well. So just from that alone, you're saving $16,000 in your tax bracket, your taxes alone. Holy moly, a 16% return on taxes. Now, consult your accountant and attorney. These are all projections, but I did my taxes last year and had a deal that we did this, and yeah, we got a pretty similar ratio, actually kind of conservative, at least for what we were doing on that renovation. Depends on where you're putting all the repairs and on the property, but if it needs a big full renovation and you put, we bought the apartment for like 3.6 million, you need 2.6 million rental. Anyways, some great tax advantages to real estate investing. And a lot of people don't look at this. They just think, oh, well, what's my cash flow going to be? How's it going to appreciate? Anyways, man, throw in that tax advantages ROI. Just that alone, I'm happy with that. Heck, if I don't get any cash flow or any appreciation over time, man, I'm getting 16% less on my taxes. And if you hold this for the long term, so the thing though, it does scrape all your depreciation the first year or two, right? During that reno. All these things though then aren't amortized over 15 years. So then your depreciation kind of years 3, 4, 5, 6, 7, 8, 9, 10 are less, but I'd rather pay less in taxes year one than spread that out over 5 or 10 years. Wouldn't you? Have your money today, because then I can be investing $16,000 into another deal and kind of do that again and again. Anyways, this is a tax advantages case study. The reason why real estate is so awesome, especially if you're in this higher tax bracket, even in a lower middle, it still would be pretty awesome. Go ahead and do that math on your own. Thank you so much for checking us out, guys. Lots of education going on here on our channel. Subscribe to our YouTube channel. Hit the bell, ding ding, to get notifications when I'm putting out these awesome videos to help you open your mind up to real estate investing, open your mind up how to become a millionaire, how to become wealthy, financially independent, everything in between, and some funny videos too. Thank you so much.